So, welcome everybody. My name is Peter Youssef, Senior Market Analyst at IronFX. We are going to be mixing technicals with fundamentals today once again. More or less, let me remind you that you can always recommend any trading instruments you would like to have a look at. And if so, please add it in the chat. Hopefully, if we have time today, we'll have a look at it today. If not, we can always have time tomorrow. That's no worries. Now, we are using daily charts, and more or less, I would expect that to be maintained throughout our analysis. Should we switch into any other chart, I'll let you know. For the time being, you have in front of your screens Euro USD's daily chart. Now we can see how the pair has been dropping since Wednesday, Thursday, and Friday. Definitely, even if we correct a little bit to the right, the upward trend line, it has been broken. So the upward movement has been interrupted. The pair's price action has broken through the S1 0.1140 resistance line. Sorry, support line now turned to resistance, yet it bounced on the 1.1040. And the RSI indicator has corrected from the highs of 70 and is near the reading of 50. It's actually at 53 right now, implying more or less that the bullish sentiment of the market has faded away. And there is some ambiguity about the direction of the pair's next leg. We definitely reverse the role of the 1.1140 resistance line now turned to support. Sorry, support line now turned to resistance from green to red. And let's go hunting for a new ultimate resistance level, support level. I'm noting this true right here. It's a little bit off, but in green. 1.0775. Locking it in. Readjusting the charts. Correcting the labels. Starting with the R3, which is now being set at 1.1385. The R2 at 1.1250. The R1 at 1.1140. The S1 at 1.1040. The S2 at 1.0940. And moving also the S3 at 1.0775. Locking it in. Now, technically, we tend to maintain a bias for a sideways motion given the recent stabilization of the pair during today's Asian and early European session. However, it's going to be an interesting American Open. Should the pair be able to breach below the S1 1.1040 and start aiming for 100 pips lower for the S2 1.0940, then we may be able to actually adopt a bearish outlook for the pair. So long as the price action remains within the corridor set between the S1 1.1040 and the 1.1140, in a sideways motion like this, we tend to adopt a sideways movement bias. Fundamentally speaking, we had two interesting developments for the pair. On the USD side of the pair, we had the release on Friday of July's PCE rates. Now the rates failed to accelerate as expected, both on a headline and a core level. That should be actually causing some bearish movement as the market was caught slightly by surprise. On the other hand, though, I have to note here that The release tended to imply that despite not accelerating, it didn't slow down either, it remained unchanged. It's characteristic that the core PCE rate on a year-on-year level remained at 2.6%. And that tended to imply that inflationary pressures are still present in the US economy. Now let's drill into the 1-minute chart and let's have a look what the market reaction was at the time of the release as such. Unlocking the chart, moving back to Friday. There you go. We had a slight upward movement, correction lower, and we're talking about a correction lower which was of around 33, 34 pips. Relative stabilization, and then a movement upwards during today's Asian and European session. So actually the release as such, despite some hesitation at the beginning, tended to support the US dollar side of the pair. It's characteristic that the USD may have also gotten some support from rising US yields, especially in bonds of longer maturity, say the 10-year bond. And we may see that being raised in today's Asian European sessions. So the market, I think, fundamentally remains driven by the US dollar rather than other currencies, the FX market. On the euro side of the pair, I would note the elections, the state elections in Germany's Thuringia and Saxony. The elections marked a very strong win on behalf of the far right, AfD. However, I would be also noting that the far left had an impressive election performance in the following sense. The far left party, Die Linke, was split recently, about 6 months ago, into Die Linke as it was and BSW, which is Bündnis Sarah Wagenknecht. So if you add the percentages of these two parties together, that will give you a closer picture on what the far left is gaining in these two states. Then you would see that the far left is practically, at least in Thuringia, the second strongest political force. For the time being, elections-wise though, I would note that the AfD came first in Thuringia, and always about Thuringia, we have the CDU coming in second, BSW coming in third, if I'm correct, Die Linke coming in fourth, and then comes ruling SPD with also ruling Greens and FDP, which are the liberals. It's characteristic that the Greens and the liberals, if I'm correct, may have even failed to enter the local parliament. It's not only a landslide win by the AfD, which by the way also strengthened in Saxony, but I think the other characteristic would be the substantial weakening of the ruling parties. And the third would be that the far left was able to maintain, if not even enhance a little bit, its strength. Now, the election results on a fundamental level tend to highlight the political split within Germany, where you have the former eastern part of the country being more radicalized, while on the flip side, the former west side of the country tends to remain more near the center. It's a very interesting election outcome, and it's going to be interesting to see how the whole political scene in Germany is playing out over the coming year, given that we have national elections next year. For the time being, on a technical level, I would expect once again a sideways motion. On a fundamental level, should the elections in Germany actually shake the government and cause it to fall, however, that does not seem to be the case right now, that could intensify centrifuge forces within the EU, given the strength of the AfD in the EU Parliament, given also that the far right is strengthening across the board, given that we have in France problems actually forming a government after the elections. So that's going to be an interesting issue, which I think will be tantalizing the Europeans over the coming months. Let's have a look at USD/JPY. USD/JPY, which seems to be on the rise. 1, 2, 3. This is the fourth consecutive day, and it has breached slightly the 146.55. Let's turn it into support line. And I'm setting the next resistance line on these peaks here. That would be in red, the 154.85. Let's widen a bit. Let's correct the labels as well, starting with the S3, now set at 140.15. The S2 at 143.45. The S1 at 146.55. The R1 at 149.35. The R2 at 151.95. And the R3 at 154.85. A little bit wider, but still worth it given the peaks and shows. So the R3 seems to have been tested to the upside once, twice, and to the downside also once, twice. And that's why I'm highlighting it's valid as a resistance line. Now let's talk direction. On the one hand, the upward movement of the pair seems to be intense, or at least clear, given that it has also breached the S146.55. There is a catch, and the catch is called the RSI indicator, which has been rising. It has risen from the readings of 30 to almost 50. It's actually at 45 right now, which on the one hand tends to imply that, okay, the bearish sentiment has been erased or has eased considerably. Yet, bullish sentiment has not yet appeared. It seems as if the market is correcting, yet remains rather uncertain about the direction of the pair. For the bullish outlook to be maintained, I think that the price action would have to start aiming for the R149.35. Should that be the case over the next couple of days, I would feel far more comfortable with a bullish outlook. If not, I would keep my hands on my mouse to close in long positions. if necessary. Okay, let's have a look at GBP USD. Now GBP USD on Friday dropped below the S1 1.3140. Let's turn that into a resistance line. Let's go hunting. Now we could base our support line all the way down here. In my opinion though, there is a mid-level. I would be noting mid-level right here. Let's take it all the way. Moving the S3 at 1.2675. Widening the chart. At 3435. Now, the pound is an interesting currency, especially against the US dollar. And I'm highlighting a number of reasons for that. First of all, we have to note that the pound had very few high-impact financial releases over the past week, and actually has in the current week even fewer or very few. So we're turning our attention towards fundamentals regarding the pound. And there are two factors which tend to play a key role here. The first would be monetary policy. For the time being, the market seems to expect the bank not to cut rates in its next meeting, but the one after that, and that's in November, which may be providing some support for the pound on the monetary policy level. On the other hand, I would be noting that we have also on the political spectrum the performance of Keir Starmer's Labour government. The UK PM practically warned in one of his speeches last week that there may be financial pain in the October budget announcement. Something which seemed to go rather well with the markets. There was no major market reaction. Usually, when we're talking about tighter fiscal policy on behalf of the government, there is a bearish market reaction for its currency. That was not the case with the pound. The new prime minister seems to be, I wouldn't say inspiring, but there is an increased confidence that the government will be actually governing without major dramas. There is some stability in the UK on a political level, which tends to be supportive for the pound. And I would be also noting here that budget cuts, in my opinion, were expected and definitely tend to be in line with orthodox economic thinking. So I wouldn't expect any major market reaction, or at least I would expect the markets to be supported on a fundamental level for the pound. At this point I forgot to mention, it would be also interesting to note Keir Starmer's efforts to actually improve relationships of the UK with the EU, which in my opinion, should we see some fruition in those efforts, we may see the pound getting some support. For the time being, we see the case that the price action has dropped, seems to be stabilizing somewhat, or at least correcting a bit higher. The RSI indicator has fallen from the highs of 70, yet still has some ground to cover before it reaches the reading of 50. It's actually right now at 61. So the market sentiment seems to be cautiously bullish for cable. However, that remains to be seen, especially in the American Open today. Should the American Open signal another round of strengthening for the US dollar, then we may see cable dropping possibly towards the reading of S1 1.3040. On the flip side, should the weakening of the US dollar be enhanced after the American opening, then I wouldn't be surprised to see the pair drop rising above the R1 1.3140 and start aiming for the R2 1.3290. Let's have a look at the CAT. Now, USD CAT actually stabilized over the past 2 days, just above the S1 1.3475. I would maintain the bias for the sideways motion to continue. However, I would also be noting here that the RSI indicator is pretty low. And it's actually just above the reading of 30. It's at 31.02, 31. So there's still a bearish predisposition on behalf of the market for the pair, which could drive it lower. It's as if the bearish tendencies within the market are clipping any gains for the Canadian dollar. And let me rephrase it. It's as if the bearish tendencies within the market seem to be clipping any gains of the US dollar, not the Canadian dollar, and are not allowing the pair to rise even higher to meet the R1 1.3590. The RSI indicator we have mentioned. Note how the downward trend line seems to have been broken during today's Asian early European session. That tends to signal interruption of the downward movement. On the flip side, once again, the RSI indicator remains close to the reading of 30, which may imply a bearish predisposition of the market for the pair. Should the bears actually get control over the pair, I wouldn't be surprised to see the price action today breaking the 1.3475 and start aiming for the S2 1.3340. On the flip side, should the bulls take over, we may see the price action aiming for the R1 1.3590. Note that volatility for the time being remains at very low levels, and that may be more or less allowing the sideways motion to prevail. Let's have a look at the Aussie. AUD USD hitting a ceiling at the 0.6795 right here. It was tested, retested again on Friday, it fell, and today remains below it. The RSI indicator remains just above the reading of 50. It's actually at 62. It's not just above. It's in the midst between 50 and 70, which tends to imply a bullish predisposition on behalf of the market. The upward trend line was interrupted, that's clear, on Friday at least. Hence, I'm switching our bullish outlook in favor of a sideways movement bias, possibly between the R1 and the S1. On the other hand, should the bulls actually regain control given the bullish market sentiment for the pair as implied by the RSI indicator, then we may see the price action of AUD/USD breaching clearly the 0.6795 and start aiming, if not nearing, the R2 0.6870. For a clear-cut bearish outlook, I would require the pair to drop, break the S1 0.6710 and start aiming for the S2 0.6575. It's a high bar for the bears to take over, but I think it should be covered. Now on the fundamental level, okay, we got Australia's building approvals. There was a wide acceleration which surpassed 10%. That was a positive signal for the construction sector of Australia, which is key in my opinion. I would also note over the weekend the release of the China's MBS PMI figures for August. Now, the release allowed for the indicator's reading to drop just a bit. It's already below the reading of 50. And that tends to create some worries about China's manufacturing sector, which is key for the Australian economy, given the wide amount of exports from Australia towards China. And we're talking about raw materials here, especially iron ore and coal. On the flip side, during today's Asian session, we had the Kaixing manufacturing PMI figure. And the indicator's reading, in this case, rose slightly, implying an expansion of the economic activity for the manufacturing sector of China. So you have, on the one hand, the NBS, which is also the state-owned agency, reporting an easing of economic activity, or if you prefer, not easing, a contraction, even slight one, another contraction of economic activity for China's manufacturing sector. On the flip side, you have the Kaixing manufacturing PMI figure, which tends to imply that there was a slight improvement in economic activity. So you're getting conflicting messages. And that's not the first time. We had similar readings also last month. In my opinion, the fact that we're getting exactly mixed signals regarding China's manufacturing sector tends to enhance my worries about its outlook. And should we see further indications that the industrial sector in China is not performing as well, we may see that fundamentally weighing on the Aussie, as it would imply practically less exports of raw materials towards China from Australia. On a technical level, once again, we are highlighting our outlook for a sideways motion. Yet, given that the RSI indicator remains rather high, it's not that full high of, if the indicator reads 70, it's at 60. But it definitely, in my opinion, tends to highlight a possible bullish predisposition of the market for the pair. And should the bulls find a chance to take over, then I would require for a bullish outlook the price action to breach the R1 0.6795 and actively start aiming for the R2 0.6870. Let's have a look at USD CHF. Okay, we have a long downward movement which is being maintained. However, there is some difficulty in finding lower truths. Let's readjust the chart just a bit. There you go. The RSI indicator is at the reading of 37.95. It's closer to the reading of 30 rather than the reading of 50. So that tends to imply some bearish sentiment on behalf of the market for the pair, despite the rise of the pair over the past 3 sessions. That would be Wednesday, Thursday, and Friday. I wouldn't be surprised to see some stabilization of the pair, though, as it nears the downward trend line. Yet, once again, the bears could take over. And in such a case, we may see the price action breaching the S1 0.8330 to form a considerable lower true and start aiming for the S2 0.80.85. On a fundamental level, I would be highlighting the release of Switzerland's GDP and CPI rates tomorrow. A possible easing of either rate or both could actually weaken the CHF, as it would imply further easing of inflationary pressures and at the same time not a contraction, but a slow expansion of the Swiss economy. For a bullish outlook, we would require the pair's price action to breach the R1 0.8550, but also breach the pre-mentioned downward trend line, signaling an interruption of the downward movement, and continue to breach the R2 0.8750. So the price action has to rise, breach the R1, breach the pre-mentioned downward trend line, and also breach the R2. It's a considerable leap to take for the bulls, and I remain rather doubtful. My best guesses would be that the price action seems to remain either in a sideways motion bias, or even we may see some bearish tendencies here. Okay, let's move now to commodities and especially WTI. Now, WTI remains confined within a wide sideways movement between the 71.40 support line and the 178.75. It's, in my opinion, quite questionable what the direction will be after the sideways motion. For the time being, with sideways motion bias is being maintained. Fundamentals regarding oil prices tend to include data about the US oil market, that's one. And we're talking about the AP and EIA weekly crude oil inventories, but also the Baker Hughes oil rig count. Should we see US data showing an increase of oil inventories, and then we may be talking about a possible loosening of the US oil market, as that would imply practically that total demand was not able to catch up with production levels, leading to an increase of oil inventories. On the flip side, signals towards a tightening of the US oil market, say, for example, consecutive drawdowns, which would be released by AP but also EIA, would be implying more or less that the oil market is tightening and could have a bullish effect on oil prices. But I think the main issue around here is the Middle East, and I would be highlighting once again Libya and the ceasefire negotiations between Hamas and Israel. Another issue which would be of interest would be on the demand side, the Chinese demand outlook, but also the US demand outlook. And to that end, I'm highlighting once again the manufacturing PMI figures we had already from China, but we're getting also tomorrow from the US the ISM manufacturing PMI figure. It's expected to remain below the reading of 50, which could mean another contraction of economic activity, yet not so wide as the one in July. It's going to be interesting to see how that plays out. Should we see an expansion of economic activity, that could signal some bullish tendencies for oil prices as well. And I think on a fundamental level, that could be the main reasons or issues behind oil's price. Another issue which tends to be a little bit captivating would be OPEC's intentions. There have been wide discussions over the past weeks on whether OPEC will be increasing its production levels or not. And should we see practically OPEC signaling such a development, that could drive oil prices decisively lower. Now, on a technical level, for a bearish outlook, I would require the commodity's price to breach the S1 71.40 and start aiming for the S2 67.90. On the flip side, should the bulls take over, I would expect the price action to breach the R1 78.75 and start aiming for the R2 83.95. Let's have a look at gold's price. Gold, which also tends to remain in a sideways motion. The strengthening of the US dollar on Friday tended to weigh on gold's price, which tends to imply some negative correlation between the two trading instruments, the USD and gold. I would be highlighting here that another factor which tended to weigh on gold's price may have been the rise of US bond yields, given that there is an antagonistic relationship between the two, between gold and bonds, given that both are considered to be some sort of safe havens. And at this point, I think that US bonds may have a slight advantage given that they bear interest, while gold on the flip side has storage costs which could weigh on gold's price. The upward motion was interrupted, that's clear. That was interrupted even on Wednesday. The RSI indicator, on the other hand, remains above the reading of 50. It's currently at 40.56, which highlights the easing of the bullish sentiment of the market for the precious metals price. Yet, has not turned bearish yet. I would expect that it tends to concur with the idea of a sideways motion, possibly between the S1 2470 and the R1 2530. Let's also have a quick look at US stock markets. Dow Jones. Readjusting the labels just a bit. I think we have a shift of the upward trend line to the right, which tends to imply that there's still the prospects of a bullish movement to the upside. And let me explain what I mean by that. I think it's going to be a bit steeper here. That's better. And let's have a look at the 1 hour chart for more accurate positioning. Widening the chart considerably. And the interesting part may also include the fact that the price action on the 1 hour chart is implying that the price action of Dow Jones is hitting a ceiling at the R1, which is the 41,660. You can see that touches once, twice. Back to the daily chart. So on the one hand, we tend to maintain a bullish outlook for the index. On the flip side, though, oh no, sorry. Now, the upward possibility of an upward movement is also supported by the RSI indicator, which remains close to the reading of 70. It's at 66 right now, and tends to imply a bullish sentiment on behalf of market participants for shares, or at least for Dow Jones, which could provide additional support and for a bullish outlook to be maintained. Given the difficulties found by the index's price action to breach the R1, as seen in the 1-hour chart before, I would require the index's price action to clearly breach the R1 41,660 for the bullish outlook to be maintained. Should that, or if you prefer, should Dow Jones actually fail to breach the R1, then we may be talking about a possible stabilization or even a correction lower. Nothing less. So that should sum it up for the day. From all of us here at IronFX, best wishes for solid trading.